Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The start of the original big move up back in November last year was generated by the large April to late October 2024 ascending wedge pattern. Following this, the first leg up was from mid-January this year, pushing and closing over the early December 2024 high, 348.35, and into new territory for the second leg higher, which, excuse me, such that by early February the market had broken over the latest 50% projected Fibonacci line of 402.05, reaching up to a high at 429.95. Prices then had a pull back into late February and a fresh rise and fall also 4 weeks ago. Now, this complete action was significant as the market did not make a new all-time high that time, thus sowing some low-level bearish doubts, however minor they may be, into the last 3 weeks action, with prices significantly staying below the 50% projected Fibonacci line at 402.05. All these actions allowed me 2 weeks ago to draw a late December 24 to late February 25 bullish shift pitchfork. As I said 2 weeks ago, and I quote, "This is a nascent prospective bullish shift pitchfork, and I'll be especially interested to see if the lower time has the desired application to draw to support the market." End of quote. Well, it did not, and I have retired it completely today. Then 2 weeks ago I drew my first bearish Andrews pitchfork here of any sort for quite a while, and it was for the early February to early March move. However, this pitchfork also did not work, as so I finessed it into the shallower dark blue bearish pitchfork, shift pitchfork you see on my daily chart. The market today is just above the declining middle time, which is currently, well, it's actually on it at the moment, 377.20. I also said last week, dropped last week, I should say, a new idea of another pattern, an early February to date sideways triangle, as yet unhighlighted, which is currently 371.5 to 404.70. The upper trend line is the same as the dark blue upper time, and I finessed the lower trend line, taking into account last week's action. However, this is a nascent pattern, having only had 2 touches per side so far. However, for now, it does look as if the top side has become well protected, but that there is no immediate incentive also to pursue the lower market idea, though the market is now mixing it with the rising green short medium moving average, currently at 377.20. And a little below this is the significant early December 2024 to date bright red uptrend, currently at 362.40. So what else is there? What now? Well, for this I'm indebted to Ray Bradbury for asking me about New York coffee 6 weeks ago, and I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025, when I last reviewed these charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom, with a bright red neckline on my chart, my monthly chart, currently at 273.80. The break higher over this neckline has already reached its primary target, but it has still opened the secondary much harder to reach target X up in the 433.35 area. What is interesting about this is that nearby to target X is the next 100% projected Fibonacci line at 433.75, quite close in the scheme of things. So what does this mean? Does this mean the market will turn at these levels? I could not say, not yet, though we did have a possible monthly shooting star pattern last month, usually seen as a bearish pattern, and I'm wondering if right now, with just today's action left, whether we are trying to another attempted shooting star pattern this month. You see, shooting star patterns, as I say, are usually bearish, so there is a bullish variety. What I can say is that if there ever was an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a reasonable choice. I'd watch that area and any approach to that area very closely. And it may even be that last month's shooting star pattern may have been the final move in the attempts higher. managing to reach just under target area, but as yet it is too early to say from these longer term monthly charts. London coffee. 16 weeks ago I drew a new large pattern that encompasses all the recent significant elements. It's not ideal and it was also quite large, but it does show promise. It's a bright red, shallow, large bull channel, currently 47.15 to 60.11. Now within this pattern sat another pattern, just about, an early November to early December 2024 bullish shift pitchfork, highlighted in dark blue on my daily chart. Last week, with a strong looking weekly key reversal down and after a 6th consecutive week of testing the dark blue lower time, that's currently at 55.65, the market broke down through it, along with the slowly rising green short medium moving average, currently at 54.98, plus the more recently drawn late November 2024 to date bright green uptrend, currently 54.86, and the September 2024 high at 54.84. The shallower dark blue bullish shift pitchfork had shown the bullish angle of attack of this market since its inception, and the support seen from the lower time was there back in mid-January, and the more recent support seen from the green short medium moving average, and especially the newer bright green uptrend seen over the last 5 weeks as well, adding some legitimacy to this pattern, but not anymore. I've kept this pattern on my daily chart along with the bright green uptrend just in case the market decides to repair the damage and move back over both, though this seems unlikely right now. There's also another pattern to consider here, which I pointed out 6 weeks ago. It's a late January to late February Adam and Eve double top pattern. The primary target was reached 5 weeks ago, leaving only the secondary hard to reach target X at 51.28 still open. This target is just above the small congestion zone seen in late December 2024 to January 2025, between roughly 48.40 down to 5100, that formed back then a small double bottom pattern. Double bottom pattern, yeah. This pattern is today a lot closer than it was last week. However, before target X below, we have in the way the rising mauve medium moving average, currently at 52.53, which helped hold up the market back when the small double bottom pattern was formed. I'd only add this final thought, which I detailed for the first time 2 weeks ago, and that was how I drew a purple downtrend, currently at 55.85, from the mid-February high to date action. This was a nascent downtrend, untested in recent days, but it is still just about a 3-pointer, so it deserves some respect, and last week it capped the market. My only other thought is this, and is that the action from mid-February today would make a nice descending triangle, utilizing the purple downtrend and the base of the 5300 zone. I'll say no more than that right now, just to keep an eye on that 5300 zone below, especially when the mauve medium moving average starts entering the frame.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.